Hello everyone, my name is Ashley and welcome back to my channel. I just want to say I've been away from re-recording because I actually had COVID twice, and I noticed one of the things that I was dealing with since having COVID was I was having shortness of breath, and it was extremely easy for me to have shortness of breath if I wasn't even doing anything with something as simple as talking. So I am better. I feel like I have been getting better. I still notice it, but it's been a lot better. So I decided to go ahead and kick out a video for you guys. Okay, so first of all, I wanted to point out something. We are institutional traders if you trade this strategy. With that being said, we do not get our direction from the 15-minute chart. We do not get our direction from the 5-minute or the 1-minute. We barely get our direction from the hourly. Everything that these banks do, it relies on the daily and higher. So you have to be aware of every time frame you're trading in. So with that being said, I'm going to start a level series on the several ways to count and what to look out for, but you have to be aware of a few basic things, and that is that we are institutional traders, and what are we paying attention to. So first of all, something that you should have on hand, and I have it pulled up, is the Dixie, and that's the US dollar. Obviously, majority of the pairs trade against the Dixie, so it's very important to have this up. This is a dollar index, so you want to keep track of the indexes. I believe, most currency pairs have an index. It just depends on if your broker displays the index or not. You can check them out on TradingView if you want to keep track of the indexes. Because I know 2 of my brokers carry the Dixie and 1 of them doesn't. And then 1 of my broker carries like the Euro and a few other things. So it's very important for you to pay attention to what the Dixie is doing, because that's gonna pretty much have an effect on the currency pair that's trading against it. All right, so first things first, when we are trading, now me personally, the first thing I do is I always start by finding my anchors, and I do this on every single time frame. Now, depending on if you're using TradingView or if you're using MT4, you can designate this to show on a specific time frame. So an anchor is, basically level 3 activity or peak formation activity that we're trading away from. So obviously this is an anchor, and this is how I mark up my charts. This is the first thing I do. I remove draw as a background. This can be any color, but I kind of like to keep it, well, for me, I don't want to say mute, but I just like to keep it, as light as possible. Not that color, because I'm used to doing this, but for you, you might want to make it something bright so you can see it. And then, of course, this is a daily. So the daily, I want my main anchors to show every time frame down from the daily on down. So this is my anchor. That's a peak formation high. And this is a peak formation low. This whole little range from here to here is the peak formation. Now that I have these anchors, these are my 2 recent anchors. I would be dropping, well, technically I start from the monthly, to be honest with you, with the anchor. So we're gonna box off that anchor, and that's a monthly anchor. We're gonna box that off as well as this is freezing, as a monthly anchor as well. And then this most likely is an anchor as well. We're not for sure yet, but it's giving me, this is an M, this is W, this is possibly an apex nadir, and this is possibly the second leg to the W. Let me see if I have a writer tool. I'm using a new program to record too. I had to actually reprogram my MacBook as far as the Windows program that I'm using. I had to reinstall it because Apple had an update, so I had to go and do everything over as well. So let me see. So basically, no, that's not what I wanted to use. Let me get a trend line. So basically what I'm saying is I'm looking, let's take that off of raise. I'm looking for something possibly like this if it's in multi-M. I'm looking for something like that. Now, that would be an anchor as well that I will box off. And this is a huge possibility because we're still trading under the blueberry. Or this could be a reset. And that could be the anchor as well. This could be an anchor ending, and that could be the anchor as well. But right now, I'm not going to say this doesn't matter because this is the current price segment we're trading in. But I'm just going to, honestly, how I would be, well, it's the monthly, so I would probably just assume this might be that. So anyway, we have the weeklies. So I would pretty much be marking off, this is still that big giant anchor, and I would designate it for the weekly only. This would pretty much be, since we're trading on a weekly, the weekly cycle. Let me copy that. This would be an anchor. This would be a level 3 anchor as well. It's just smaller. This would be one, and this would be one. So I don't really care. I mean, I do care, but for the most part, with what's going on, I'm just trading the last quarter, and this is 2013. So you don't really, it's important, but because you see it rejected in 2020, but as far as this, you can probably not. So now we're on our most important time frame. Now, the daily, I have our recent anchors marked off, which means this was a, and technically, I would have this marked as well, because this is our full, this is a full cycle, and this is a full cycle. So now we're pretty much in the midst of this. So right now, this is what I'm focusing on. This is a sell side model, and this is a buy side model. So this is what I'm focusing on right here. Just this swing. Okay. This is what we're trading in. All right. So what we know is, overall, we're still trading below the 800. Now, you always have to zoom out to see what's going on. Okay. So for the most part, this pair is in an uptrend. All right. It was trending up, came down a reset, trending up. This is probably a situation where it might be the case of another reset and trend back up. And I say that because we came below the 800 and we're moving above it. Okay. So we have our directional bias, at least for the daily, because the daily is what takes control of everything. All right. That's what your bankers are seeing. This is what they trade on. This is what they focus on primarily. Everything below is easy pickings for them, but this is what they're moving on. And if you don't watch the daily, then we're watching the 4 hour. But there's a reason why I stick to the daily. The daily /4 hour for my directional bias for the week. Okay. So first of all, we are still focusing on this section of price, right? So we see that this is our anchor right here in this area, and we're looking for buys. We are not looking to sell. If we are looking to sell, it's temporarily. So that means 10 to 30 pips, depending on the pair. Okay. And right now I'm just talking about currency pairs. I'm not talking about crypto and indices. And a lot of people who know me know that those are the things I prefer to trade. Now, if I want to get some sleep, it depends. Because actually, I'll sleep through a crypto trade as well. So I take that back. It just depends on what type of mood I am in. Sometimes I am a very aggressive trader, and I'll trade both ways, and I'll take it buy and sell as the swing is forming. And sometimes I just put it in and I just take the one direction. I can say since COVID, I've been working on becoming a swing trader, which is just really holding it longer. And that's really taking this down to here and taking this up as far as it go. But that's going to take a little bit of mental work for me, because I do not like level 2 for the fact that oftentimes level 2 pulls back into level 1. So that's kind of essentially watching profit retrace. So I don't really like to do that. Okay, anyways. So we're focused on our directional bias, right? At this current, okay, let's just, I'm going to block this price segment off. Just because primarily when I'm teaching, just to get people to understand something, I want to focus on closed cycles rather than open. Okay, so I'm gonna try to, I don't know if this is gonna work. Let's see if I could block this off. Let me see. Okay, it highlighted. Okay, anyway, let's just remove this for now. We're not going to pay attention to this, even though this is our current price segment. We're going to pay attention to this. All right. So here we are, of course, at level 3 activity. This is our peak formation high. We know this is our peak formation high because if we didn't have this at the current moment, this is our highest point. We always want to box off our highest points in the sessions, not the sessions, but the time frames we're trading, because that's determining the current high or the current low. So we're boxing off the current highs and the current lows, because really essentially what you're doing is looking for broken highs and broken lows, so we are in a peak formation situation. So I'm going to start by counting so you can understand why where we have 3 levels. Okay, now overall, this whole just this everything, this is like one big huge level. Okay, and you can count this if you want to. What I do is I typically would just count it on the higher time frame to see where we are. This was a level 3, and that's most likely a reset, but it level 3s on the higher time frame, depending on if you're looking at the daily chart, that plays out for a whole year. Not level 3s, but just whatever level you're in, that plays out for a whole year. As you can see here, this is September 2000 to December 2001. So we are not hedge funds, so we're not really, as far as BTMM traders, we're not really concerned about all this. Once again, unless you're swinging, that's a different story. But, you can always be aware of the higher time frame levels. I usually will mark those up as well. But essentially for intraday trading, that does not matter. Okay, so the daily, once again, like I said, this is most likely a whole level 3 here, the 2 and then 3. Okay, so if you're looking at all of this, you're going to be like, oh my gosh, this is like a big level 3, a big level 2, a big level 1. Okay, that's fine. But what we want to focus on as intraday traders is we want to focus on current price segments. Okay, so this was that last recent high, and this is that last recent low. So this is a price segment. Okay, so this was a price segment, but we've already finished that cycle. Okay, so here we are. Let me start by designating what we're looking for. Okay, so this is our peak formation of all of this, right? This is our first broken, this is the first low here. Okay, so we're gonna call this level 1. Okay, and we want to make sure you see this on the daily on down. Okay, it must be gray. Yeah, it is gray. Actually, I don't even like that text. I don't like that one. Let me add the one I like to use. Oh, I guess that is the one I like to use. I'm tripping. Okay, whatever. All right, let's do that again. So this is the first low, okay? Start by adding the time frames you want it to be seen on. And I do trade to the minute, so I make sure the key levels are marked on every single time frame because I trade literally this same strategy down to the minute, okay? So this is our level 1. And this is not level 1 of the daily. This is just level 1 of that price segment, okay? So, can't spell either. Degree for nothing. Okay. Level 1. All right. So each level has its pullback, okay? And also, depending on the pair, level 3 and level 1 is, level 3 and peak formation high is essentially the same thing, or level 1. It just depends. It might have a small peak. So here we have our peak retested, and this is our peak right here, and it's a pullback, all right? And then we push into level 1. This is level 1. This whole movement here, that is level 1's push. This is level 1's consolidation. Now, consolidation doesn't mean strictly left and right. Yes, it's left and right, but it's angled. So once again, we're going to pretend this was the 15 for all those who believe, oh, this strategy doesn't work. I'm not getting it. So this is level 1 consolidation. Okay. And you're advised not to trade back towards it. Now on the daily, I do. Okay. But if this is the 15, you just made this one push and there's a pullback towards that peak, right? And it's angled to where it's an M. That's a trap M. Okay. So this is something that I'm going to mark off now, and I'm going to color it in red, just to signify a do not trade towards the peak. Okay. We don't want to trade back towards the peak. Now, once again, this is a daily, so I trade it with caution. I trade it as a small 1, 2, 3. And depending on as well, if I am how I've been lately, I'm not trading it at all. I'm just going to look for my reason to sell. Once again, my reason to sell is primarily, this was level 3 peak formation activity, but we're trading under the 200 EMA, and this is a 50. So the 50 is your guide. The 200 is your direction overall, but the 50 is your guide. The 800 is directional as well, but these two EMAs you pay attention to the most, the 200 and the 50. All right, so we're trading under the 200. Therefore, I'm looking for reasons to sell, okay? And this is a peak formation high. So this right here is level 1 consolidation. I'm not going to try to sell back towards that. Now, being that this is also an M, it has this apex and nadir as well. So I'm not going to sell in the middle. I'm going to wait for that second leg and then sell, okay? Now, this is level 2, okay? This is level 2's push. It also has its 1, 2, 3 as well, because remember, level 2 also resembles level 3, but not to mention, being that this is a daily, it has its own little mini cycle. So this right here to here is a peak formation high to a 1, 2, 3. This is its own cycle as well, okay? And that's what you would be trading actually throughout the month. So we're gonna go ahead and mark this as level 2 activity, and I copied it so it's showing the levels that I want it to be shown on, right? Now we're going to take that same red box and bring it over, and I'm gonna say no buying. If this was a 15, no buying in that range. Typically level 2 you can buy both ways, but just because you guys are learning, we're not buying there, okay? So it pulls back to the water, which it loves to pull back to the water. It came short of that, but you could still sell. It came exactly to the water here. That's the first leg. This is the second leg. This is the apex. This is the second leg. So here I would be wanting to sell. Okay. So this is level 3 push right here. This is level 3. Okay. This is level 3 consolidation, all of this. So typically when you're dealing with level 3 consolidation, which is essentially creating a W or an M, any form of it, and anytime you are dealing with level 3 activity, you're most likely going to always see trapping between the 50 and the 200 as well. So just like you would see a close below and back above and back below for the 13 EMA, you would also see that for the 50 EMA and the 200. And remember, essentially the 800 is not in play as far as interaction for some time. So you will see a lot of anchor formations as far as like the smaller anchors formed completely off of the 200 EMA. Okay. So with the daily, we're concerned primarily where, let me mark this off for you guys so you can see that this is level 3. Okay. So what you'll notice with what I'm doing with level 3, low, this zone is retested, new low, this zone is retested, new low. So essentially what you see is with this daily, you see a pullback to the 50 EMA, push, pull back to the 50 EMA, push, pull back to the 50 EMA. So you are essentially paying 100% attention to pullbacks to certain EMAs, and that's the 200, that's the 50, and that's the 13. Now, as you know, the 5 is our price. The 13 is containing price. So if you're moving below this 13 and you're below this 5, this is good. We're in a downtrend. We want to be below this 5. If we're in an uptrend, we want to be on the other side of this 13, and we want to be trading above price. So obviously this is showing us this is a pullback. We're above the 13. The 5 is above the 13, then price is below the 5. That means it's a pullback. Okay. Same thing goes for all these other EMAs. This is, we're in an uptrend. This is an uptrend. The minute price started to pull below the 50, we want to be selling. Okay. So remember that if you're below the 50, you want to be selling. If you're above the 50, you want to be buying, even if the 200 is pointing down or up. Okay. For example, here, the 200 is pointing downward. We're below the 50, but we want to sell here. Okay, we're selling here because we're still below the 50. And then here what we're doing is we're below the 50, but price has crossed above the 5, so we want to be trading above that. So those are small things to pay attention to, but anyways, we're back to what we're doing. Okay, so these are our levels. We got our levels marked out. All right. So this whole situation right here, this is a very large peak formation. So obviously we're going to be buying. Okay. Now I'm not going to really touch that right now because this is not a full cycle. I just want to show you a full cycle. Okay. So now me as an intraday trader, okay, I'm going to change this to another color, or I'm going to try to delete it. Okay, let me see. Just object list. This is how you can get rid of stuff without doing the most. Okay, that rectangle, delete. That rectangle right here. Show. Oh, that. I didn't want to do that. You can also kind of click on them and it'll tell you what it is. Usually you can name these like peak formation right there to make it easier. I didn't do that, and that's fine. Let me just go back to where we were so it don't take up much time. Okay, so I'm just going to work on this one because it's clickable right now. Let me change that. I'm going to change it back to green so you can see it. Okay, so this is something we are going to pay attention to now as intraday traders. All right, so we know what's going on in a daily. We're selling, right? We're going to drop down because essentially this is really like a quarter. So this is, well, or a little bit over a month. So this is a month for the most part, like a few weeks over a month. Okay, so most of us are not, we're not doing that. Okay, we're just not doing that, especially if you want to make money. We're not sitting over here, you know, watching, you know, for a whole setup to come for a month. Okay, but let's just say we're in this current condition. All right, so this is a peak formation on a lower time frame. This is the H4. Okay, these are weekly separators. Okay, so this is 1, 2, 3, 4, 5, 6, 7. This played out over 7 weeks. Okay, so in the meantime, we're trading level 3 activity in 7 weeks. Okay, so this is the 4 hour. All right, now this is us. This is what we want to pay attention to as intraday traders, right? So this anchor forms, it's 2 pence to the 800. It's level 3 activity. We know we're in a downtrend. We know anchors typically start off the 800. So we're going to get this thing going. We know we got our direction. This is our peak formation. All right. So we got our level 3 designated here already to know that, well, that ain't even happened yet. So just ignore that. But just, this is just in case, like when you're trading overall, you know what you're in. Okay. So you don't expect nothing long term. Expect a little bit of craziness, but expect range trading. Level 3 is my favorite range, like level to trade in. It's range trading. It's not nothing to be afraid of. I know a lot of people who won't trade it. It's nothing to be afraid of. You know what I'm saying? So you got to get your pants, your big boy pants on. Okay. So anyway, we know we just formed our anchor of this price segment, or our level 3 anchor, or the push into level 3 anchor of this price segment, right? So this is designated off. This is our anchor right here. I'm going to bring it here. Just, it shouldn't even be way up there, but this is our anchor. Okay. Level 3 activity. One of the ways that you can tell is that it's the highs and lows kind of tighten up with each other, and they trade back and forth. They trade from whatever high to low, whatever high to low, whatever high to low, until they break it, whatever high to low. Okay. So we are in a downtrend, right? We're intraday traders. We're getting our direction from the 4 hour of the daily, right? So this is our anchor. Okay. This first broken low, that's our level 1. Okay. All of this, or you can most likely, yeah, it's actually not even, it's our peak formation broken, and then it's a pullback, and this is level 1. Okay. So right now, we are concerned about what's under this 50 EMA. Okay. So we know this is a downtrend. We know this is an anchor. We're concerned. We're below the 200. We're below the 50. I don't want to do any buying here. Okay. No buying. This is intraday trading. No buying. All right. You see, when I zoom in, when we take our buys, it's to the 50. Okay. That's our pullback areas. It's to the 50. So when you start to calculate these pips here, it's nice. It's about a good 90 to entice you. That's great. But when you start looking at everything else, it's just 50, which 50 is still good intraday. These are good intraday, but you're not taking them, you know, you're not really taking them to the moon, where a lot of people seem to think, oh, it's going to the moon. So this is most likely our intraday anchor, the lower time frame. So you just took that 79 pips. Now that's early in the situation. You just took that 130. Okay. So once again, I am a trader who trades both ways because I typically know the direction. You're watching this video. That means you probably have a little bit of trouble. I wouldn't suggest you trade in both ways. Okay. Now, as you know, on every time frame, price is contained by the 13 EMA, but it's pulling back to the 50. Okay, so now we are not trading the 4 hour. Most people are entering on the 15-minute, but you're essentially trading the price segment and the daily and the price segment of the 4 hour. Okay, so now we're gonna drop down to well, let's mark up these levels. Okay, so this is level 3 of just that whole range. Okay. You got a few. Well, let's just keep it to level 3 of the H4. I don't do that. So if it gets a little bit tough for you, I always suggest turning on back to the daily, because it's less clutter and you can see what you're looking for. Okay, so this would be that peak formation, pullback, that 1, that 2, and that 3, because you're looking for 3 hits to a high or 3 hits to a low. Doesn't matter the time frame. Okay, so let's just go ahead and mark. This is crazy. This is all level 1. Okay. And essentially you actually have more levels. So actually this is probably, you can designate that. Peak formation pullback 1. This is 1. There's a peak formation in there. So L1 visualization, we could do H4, down. Okay. It disappeared because we don't see it on this time frame. Level 2. Okay, H1, H4. Okay. I'll put that there. This is more so an outside structure. Well, this was an outside structure. Either one is outside structure, but this is what I would pay more attention to, because this is what has its level of consolidation. So I would actually still designate that as 3, and that's the peak formation. Okay, low, which still 3 and peak formation low is still the same thing depending on the pair or what you're looking at. So, but pay attention to those outside structures as well. 3, and then I'm going to mark a peak formation low here, which would be designated off by a box. And okay, mark that down. Okay, so this is our current, this at that time a moment, this is our current price swing for those however many weeks. That's 7. This is, shoot, this is a quarter. Actually, this is the rest of the year. Okay, so that's October to December. This is what we're worried about from October to December. So from October, a peak formation a high was created, down to December we should be trading in a downtrend. All right, so we marked up our level 1s, 2, and 3s. Okay, so we got our 1, 2, our 3 peak formation low. Okay, so from October to December we're in a downtrend just based off of this price segment of the daily. Okay, so, and of course we know that because 800, 200 is trading below that, 50 is trading below that, but more importantly just these two are our main guides that we're focusing on. So we want to be looking for price segment to sell. So you'll see most of the time that will be some form of a pullback to the 50 and the 13 EMA. Now for optimal entries, we want to enter off of the 50, or we want to enter off of the finish of the trapping with the 13 EMA. Okay, you see like here it traps 13, but it's still attempting to touch the 50, but it's just not, sometimes it doesn't get there. Okay, so as intraday traders, we know, okay, the 4-hour has at least some form of a peak formation high here. We should be moving down. Okay, so now hourly, this is our week. Okay, this is what we're doing for the week, and you guys need to realize that this is designated by a week, 5 days. Okay, so I'm gonna go and find that area that we were, that's actually some time ago. Okay, this is what we're trading in. All right, this is that week, and it's funny because as far as back it'll go. All right, so here we have its own cycle. Okay, its own cycle. It has its own cycle. For every one level of the higher time frame, there's 3 smaller levels in that time frame, and 3 smaller levels and 3 smaller levels. So right now we're at that 3 smaller levels because we're on the hour. This is considered a peak formation low as well, and this is a peak formation high. Now I would definitely box that off, and I would designate that to be seen, really, if it was me, it would be the hourly down. Okay, and I marked the 30 because sometimes if it's too much junk going on, I will drop to the 30 to see those levels. Okay, but I don't want to do that right now. All right, I have to take a break. Okay, so we peaked at the 30 for a minute. Let's go back to our swing. Okay, all right. Now, of course, because we're trading our directional bias fully based on that price segment of the daily, you are able to buy. Don't think you can't. But you don't want to buy to the moon, okay? You want to focus on selling. That's what you want to do, okay? Especially because they like to drag out levels. As you can see here, this is a dragged out level, okay? So, what we're doing now is for the week, okay? This is the weekly tracer. This is Sunday, Monday. What we're doing is we're designating what we're trading for the week, a part of this big giant price segment of the daily, okay? So this was its own cycle here. We marked that off to see that down. Actually, let me delete this one because I like to just put, this is quicker. Just copy it. All right. So now we have our current second leg of that big old, well, you can't even see the rest of it, but just that big old anchor on the H4. Okay, that's our second leg. So even that second leg has its own 1, 2, 3. All right. So we have our peak formation here. We have our safety, and we have our moves out. We have that full cycle. This is a week. That's a 1 day, 2 day, 3 day, 4 day, 5 days. We have a full cycle here. So this is why you want to pay attention to these. All right. So then of course we bring that down. This is a new cycle. Okay. This is typically a 1, 2, 3 as well. It's smaller, but it's a pullback to the male for the H1, the 800, the 200 for the H1. Okay. So from there, you would have your little cycles. We count our levels on the H1 at minimum to trade intraday. Okay. So even though we're counting levels on the hourly, remember, this is all just level 1, level 2, level 3, level 4, okay? Or peak formation low. So in this segment here, we have most likely 3 times ADR, a little bit over it, okay? And that's just for those 5 days, okay? That's just for that week. That's for a week, okay? Now, that doesn't mean this whole area is level 1. This whole area is still a peak formation here, okay, on the daily. It's a peak formation of that price segment. But overall, that doesn't mean this is level 1, okay? This is just a level 1, 2, 3 within the 4, okay? This is just one whole level. Let me box it off. This right, oh, that is not a box. Let's delete that. All of this in here, where is my box? Okay, let's just do it right here. I'm gonna make it white. Okay. Let's just put that on the hour for now. So all of this in here, right here, that's a full cycle on the H1 for that price segment, but that's just one whole, that's just one leg for the H4, okay? 3 levels of H1, so 3 pushes of H1 is 1 leg of level 1, and by leg I mean price segment. So 3 pushes of H1, 3 levels of H1 is really just one push of level 1 for the H4, okay? So even though you have this big gigantic level 1, level 2, level 3 here, you were focusing right now on this, okay? You still want to be aware of all of this, but you as an intraday trader are focusing on this, okay? So this was a week, all right? And that was a full cycle of a full level 1, level 2, level 3 for the hourly. And let's see, how many pips was it? It was 224. This pairs 3 times ADR is only 142. Now, 3 times ADR. 3 times ADR is just that. It's the ADR for 3 days, okay? So, 3 times ADR means a possible reversal. It does not mean a reversal as far as a trend. It could be a trend reversal. It can also be a reset. So you have to be aware of that. 3 times ADR does not mean we're getting out of this whole downtrend. If you're in a 3 times, say just if this was 3 times ADR, that doesn't mean, all right, trend done, time to go up. It went up temporarily. It just was a pullback to a reset and it sold down. So be aware of that. Reversal does not always mean out of a trend into a new one. Now, with that being said, if you're paying attention to the current price segment that you're on, that I'm showing you as far as the daily, you would be able to catch resets and realize that's what you're in, because you're realizing you're just pulling back to something. Now, resets are just that, pullbacks, okay? It's a pullback to reset and start again. Okay, so don't think of resets as, oh, there's some crazy, I don't understand on how to spot them. I don't get it. This is how you would spot them, and it's the easiest way possible. Okay, so this is that 1H4 push, okay, of level 1. There was a few cycles here, okay, intraday. Now, you are counting that cycle on level 1 for intraday means you are counting the pushes and the pullbacks to the 13 EMA, which is what you're looking for on the 15, which is that market maker cycle on the 15-minute time frame that we are all taught. You're looking at this right here, peak formation 1, pullback 2, pullback level 3. This is what you're looking for, that interaction with 13 EMA. And sometimes it doesn't pull back fully. It'll just kind of go to the 5, but you'll see it trying to pull back to the 13. Okay, this is what you're trading. You're following this right here up for that week. You're following this down for that week. This is what you're following for the week intraday. This is what you're following. You got your level count for the 15-minute time frame here. Okay, this is your level count. This is everything in that one push. Okay, so as you can see here, this is our reset back to the 200 EMA. Now if you drop down to the 30, and a lot of times I advise people, if they're having a hard time counting levels, just go to the 30. It's still a little bit of messy, less messy than 15, but sometimes it'll catch what the hourly isn't catching. All right, so our swing isn't popping up here anymore, but I'm just going to take a swing. So as you can see here, this is a pullback to the 800, which is a pullback to the, well, let's go to the 15. Here, okay, this is a day, right? This is a day. Okay, there's 5 days. This will be considered a peak formation low, even though it's a reset. It's a 800 off, a W off the 800, which is just like a W off the mail. But this is our reset here. Okay, this is a peak formation. It came above and crossed the 50 and the 200 and back below. And so now this is what we're looking at for the rest of that week, those 2 days. This is our market maker cycle here, and that's level 3. So that's what we took for the week. But you see, we followed that 50. Okay, and I'm trading above because the 800 is below, the 200 is below, the 50 is below. So I want price action to be above the 13 EMA to buy. Okay, I want to be buying. So as soon as it pulls back to 13, I'm buying. As soon as it pulls back to 13, I'm buying. This is what you're looking for. Okay, so essentially what this video was, it was just really tying high time frame levels into lower time frame levels. I will definitely go over levels for each time frame. Just not in this one video, but this is what you should be looking for when you're trading. Okay, I definitely use the TDI. What I primarily look for in the TDI is divergence of the second and third leg, and sometimes the divergence is dragged, and I'm gonna let it drag the minute it crosses below the market baseline, or the minute it starts to cross as far as the RSI and the signal line. I'm going to sell or buy, but that's what I primarily look for in TDI. And typically with TDI, I do box off my anchors. I'm going to do a TDI video anyway, but let's see, I box off my anchors in TDI as well. So this is an anchor for us. Well, this is what you're paying attention. That's that divergence. This is lower and this is higher. So now I'm starting to look for that reversal. Once I saw that this came here and price started just trading, and when it got to level 3 and level 3 was up here and not lower than that, okay, I'm looking for my reversal. Now that doesn't mean long term, because they still got to form their first and apex and second leg for that anchor, but that just means I'm getting ready to change my trend temporarily. And when I start to see higher time frame giving me a reason to change my trend long term, that's when I change it long term. Okay, so right now in this situation, my trend is in an uptrend. Even though the 800 is right here, ignore it. Sometimes remove other things if you need to, or just pretend like it's not there to ignore it and see what's going on. We're paying attention to these two guys right now. This is until this starts to turn over, then I will pay back attention to that, because that's giving you a direction down, but everything is giving you a direction up. So that means we're pullback, right? And remember, when the EMAs are pointing down, we're paying attention to that. So here, for example, remember that 50 is pointing down, but price is pointing up. That means it's going to trade into that. So I don't want to take that trade. That's the support and resistance. EMAs are support and resistance. Okay. You're paying attention to a whole lot of other confluences as to why you will get in and get out of a trade, but your EMAs is your typical support and resistance, and trap zones, zone flips, support and resistance, weekly highs and lows, support and resistance as well. Monthly highs and lows, support and resistance. You know, some daily highs and lows, support and resistance. These are support and resistance. We're always looking to the left first. We always look to the left. So even though I'm worried about this, I typically will come in and mark this up as well, because I'm worried about what's going on to the left. And if you haven't noticed, this is induce 1, induce 2, induce 3. This is our trapping pattern, which is our anchor. This is our shift. We're shifting. So now we induce, trap, shift, and now we're back to inducing 1, 2, 3, trapping, shift. That's what you want to look for. Okay. We are definitely smarter than we might give ourselves credit. Okay. And one thing that I wanted to point out is this strategy is not that hard. It might seem hard, of course, at first, because it's new to you. You have to remember a lot of things, but if you keep at it and keep studying, you would definitely understand, and you would definitely see what I see. You would definitely see what the creator of the strategy sees, and you would kill it. But you have to put in the work. You have to put in the chart time. I recommend at least 10 charts daily of marking up. And a lot of times, for me, what I did is I did it the monthly down. I did it to the monthly to the 15. You know, I recommend that. I recommend putting that chart time in daily. And a lot of times, if you don't understand something, watch it 50 billion times until you do understand it. And even if you do understand it, watch it again and be able to just regurgitate everything, you know. So this is something that you definitely can get. Do not give up. It's very rewarding. I've had many trips to the bank where I'm just like, thank you. You know, especially as a single parent, I'm so grateful for this skill. I'm so grateful for this strategy, and I'm so grateful that I was able to learn it. And that's why I don't have a problem with sharing tips, because sometimes we all just need a little help, and we just need that one push to say, okay, what's going on here? Okay. So definitely don't give up. Keep trying. Look out for some new videos soon. Share this video with your fellow colleagues that you are, you know, your trading circles or your group of friends. Share it with them. It's no point in keeping it for them, you know, from them. Okay. So remember, thank you so much for tuning in. I try to keep my videos under 10 minutes, but some of them are not 10-minute videos. Don't forget to like, share, and subscribe, and even comment below. And don't forget to follow me on Instagram at AshshmoneyD. Happy trading.